And good afternoon. Welcome into Market Talk for Monday, January 25th, 2021. A good afternoon to you. Thank you for joining us wherever you may be listening in. I'm your host, Jesse Allen. Great to have you here. MarketTalkAg.com, our home on the web. Find us via our many radio affiliate partners as well, including all of the Alpha Media Farm Network across the country from the Dakotas down to Texas. Also, our friends at KASM and Albany, Minnesota. KMA in Shenandoah, Iowa, and also the American Ag Radio Network joining us as a new affiliate. You can find us Facebook, Twitter, Instagram, all at Market Talk Ag. Well, an interesting Monday. We saw the huge drop on Friday, and we're thinking, oh no, as the bottom, has everything kind of shifted in this market. And then today we come back and we trade higher. Let's talk about it. Let's bring in our guest, Bryan Doherty, Senior Market Advisor with Total Farm Marketing by Stuart Peterson. Bryan, good afternoon. Good to have you back on.
Jesse, great to be here, and good afternoon. Yeah, good afternoon to your listeners as well and viewers in Iowa and elsewhere that are going to get hit with a winter storm here.
Yeah, winter storm. I was talking to my family back in Iowa, and sounds like they're going to be on the lighter end of it. It's mainly going south of them, just barely, but sounds like the Midwest going to get hit with a pretty big winter storm. And it was about time. I think we've had a pretty mild start to the year, and we've had a pretty crazy start to the year in this grain market. And I was fully anticipating today, Bryan, to open up the show and ask you about Friday's big drop and where we go from here. And the overnight trade was mixed, and then we put 30 cents back on beans today, and we put 10 to 11 cents on corn, and 13, 14 cents in wheat. So it sounds like some of these funds decided to get back into the market after Friday's big sell-off.
Yeah, you had some real harsh selling at the end of the week. A lot of stop orders being triggered, and everybody's asking why, and you can point a lot of fingers. But I think in general, when we look at, let's say, row crops, you had some things come together at the end of last week. First of all, there was talk that there were some bigger, let's say, and I'm not sure if hedge funds is the right term, but managed money hedge funds in China that were selling. So that kind of got the ball rolling. The question is, well, why are they selling? Well, you had three events last week that sort of, I think, set the tone late in the week. One is you did have some type of selling which triggers sell stops. So when you have open interest as large as it has been in corn and soybeans and wheat, you can expect that if there's some weakness, sell stop orders are going to get triggered. And that's really what happened, we think, on Friday. Corn pushed through a 10-day moving average and just got slammed. But there are some other things. One, you'd have to argue that the weather in South America last week was better than the previous week, and maybe better than the last 2 or 3 weeks. Brazil is getting much needed moisture. There's some private forecasts that edged up the total crop 1 to 2 million metric tons out of Brazil. So that's kind of a change of course. The crop had been declining. And then probably for me, maybe the more worrisome is there was a reported outbreak of African swine fever in China, and that's a big deal. And was on the fourth largest hog producer, over 1,000 sows infected, a couple facilities. That's not the kind of news you want if you want to sustain bullish momentum in the bean market. Today, though, the market, it did, Jesse. It started out soft, looked kind of sour before the 7:30 or 8:30 resumption of trade. Trade goes into pause at 7:45. And for 45 minutes, it just looks like we're going to see some big follow through. So for at least one day, the market got a big reprieve, and it really bounced back strong. I think traders took this as the dip to buy, as the bigger fundamentals still look very friendly for soybeans and potentially very friendly for corn.
Well, we've talked about kind of that dip to buy and a little bit of the technical correction that was probably needed in this market, and some of those funds had just gotten way too long, and just it had to hit a point where we had to sell. But we look at where this market fell back to. We basically went back to pre-report levels to where we started 2021. So we have to keep that into perspective. And I think a lot of farmers, if they're doing any marketing right now, have to keep that in perspective, that these price levels are still very, very good. And today was maybe just a nice little bonus, a little shot in the arm to give us back some of what we lost on Friday.
to your point, I think as producers, what you want to be aware of is where we are time of year,
Mhm.
because if you look over the last 5 years, the market's had a tendency to sort of peak early, particularly in corn. Beans have a historical tendency to kind of come under some pressure, or can come under some pressure now, bounce back, and then come under pressure as the southern hemisphere crop really starts to become available to the world market. Um, to that end, though, I think another thing I forgot to mention about last week was the likelihood that farmers selling really picked up in the early part of last week. Those are really, the best prices in 7 years. Been waiting around for the new year. Positive report, positive reaction. Market moves higher. Take a basis off, and there were farmers selling corn in the $5 vicinity or better, and that's going to pull a lot of bushels out of hands, and that too may have weighed on the market some.
And you mentioned basis, and I think that's something we need to talk about a little bit as well, and just where basis levels are sitting because we saw the big run up in the markets, and it seemed like basis started to get more and more friendly for producers in a lot of parts of the country. I was talking with some guys who had some soybeans at kind of their wild card beans, and they're saying, hey, even if this market drops 50 cents, I'm still really good. I'm still selling, 12.70 beans, $13 beans, somewhere in that range. So basis has really been friendly for producers who've been doing any marketing and who still may want to do some marketing here as we start this week.
Right, and the risk is, if the southern hemisphere crop starts to really show itself, that all of a
Mhm.
sudden the export market slows, and then that base begins to widen. But to your point, part of that tightening basis, it's twofold. One, again, I sound like a broken record, but a reflection of lack of supply or carry in from the year before. I just can't get past the idea that the crop wasn't as big as the USDA last yield estimate was, and then take into account the lighter test weight. Those things, big deal. It is a big deal. The other thing is that, from a cash standpoint, money standpoint, um, farmers weren't really pressed to sell corn or anything after the first or into the first of the year. They had a good year last year, didn't have to sell. I think they've been reluctant. They see this bean market stocks usage number at just such a historically tight level that expectations are the market moves higher. The problem with a bullish argument after the market's already moved a lot is there's always another add-on. There's always another reason to be bullish. As a farmer or producer, really think about just, the real potential. You ride it all the way up, start to ride it down, and then it collapses. And today, I think, to your point, Jesse, early, we were just really lucky we didn't get a real collapse today. And all of a sudden,
Mhm.
beans limit down, corn limit down, and you look back and go, wow, everybody was bullish and I didn't sell anything. So sell these rallies, reward yourself, talk to your advisor, look at ways if you want to go back into the market with a quantified risk, some kind of an option strategy, and be really happy with your cash flow, your pay raise, get in front of the market for moves higher, whether in South America, but keep yourself balanced.
And even look out to some of these new crop prices and maybe even into 22 as well. I think that's something that these producers have to consider with prices at these levels and doing some of those strategies you mentioned.
They're two different beasts, old crop, new crop, and the price is different. But I think you have to look at them as two different beasts. That is, the new crop is priced the way it is because one, expectations for more acres, two, probably rebound in world supplies due to better crops. So it doesn't mean the market can't rally. It's just that it's got to a point here where the market's going to probably have to really sense that we're tight on inventory, that the second crop, safrinha corn, is a disaster, or that we have some real problems producing our crop at home. The market hitting $12 on beans and over 450 on corn. We hit around 465 in that new crop. What a great point to get started doing some things. And again, figure out which tool you want to use. Spend some time with your advisor and just kind of talk about what might be best for your operation.
Now, over in livestock, Brian, Friday obviously was the exact opposite of the grain market. We saw impressive strength in cattle and hogs with the dip in grain prices. And then, I was coming into today's markets. We saw the bearish cattle on feed report, and I'm thinking, this cattle and hog market might fall apart on us today when I saw grain start to take off, but really didn't. We saw a fairly quiet day, and I guess we held our ground throughout corn or cattle and hogs today.
Yeah, and it's kind of interesting because I would say economically, if you looked at just this week, we had unemployment claims up a little bit. You got this COVID spike and worries about lockdowns and things like that. But it seems like the market is looking beyond that, and that's why it's the futures market. It's looking beyond that. Cattle on feed report was what it was. Placement number was a little high from expectations or on the high side. I think you want to get a couple or three of those reports aligned together, especially the placement numbers. So I kind of took the report with a grain of salt. The trend is up. Demand is solid. There again, don't let too much slip between your fingers if this thing looks like it's going to tip over. We just haven't any sign that it's going to tip over yet.
Mhm.
And I think there's just a whole lot of expectation that as we move into the March, April, May window, and as the vaccines get more widely distributed, and as the cases of COVID basically start to decline, that you're going to get more of this pent up demand for a lot of things, including meats, restaurants. Restaurants are going to have to book a lot of stuff at some point.
Mhm.
So I want to say that's maybe the driving force. You also had a winter storm pushing through. That may have done something, but I was really surprised, maybe even today, that it held up as well as it did, because I thought last week on Friday you could simply argue the traders were buying livestock, selling grains. It was that simple. You livestock up and grains down. But bigger picture perspective, anticipatory demand. Maybe there's some concern that this African swine fever in China could be a little more legit, and so traders were buying hogs.
And that was going to be my next question: is do you think that those reports from Reuters and other sources in China with the ASF over there has really kind of given a shot in the arm to this hog market for us? Maybe anticipating that we might be sending more pork exports to China.
I think you got a couple of things you could that could be. It's hard to necessarily connect those dots today until you get enough under your belt and more time, but certainly, maybe lightly connect those dots. I think the other thing too is just remember what happened last summer when we were euthanizing a whole bunch of the hog herd and um, creating some supply. I'm not going to say shortages, but things that tighten the inventory that was certainly going to show up down the road as well. And that down the road is where the futures market is right now, and maybe even into summer.
Well, and looking overall at this cattle and hog market specifically, and like I said, and you mentioned as well, really nice to see it hold up today. Um, and looking, at the feeder market as well, only down a little bit in those front months today. We're looking at really good price levels. It seems like even though all the COVID factors and everything, in this marketplace right now. Seems like there's probably some good opportunity for producers here. I'll be interested to see on the cattle side what our cash trade looks like this week, though. I think that's going to be a telltale sign. What do you say?
Yes, it usually is. For cash cattle trade, it's always dead on Monday or
Yeah.
undeveloped. And
Yeah.
the futures market, I think, kind of maybe indicated that today as well. But kind of getting to that big picture perspective, typically when grain prices are up, feeders are not. I mean, that's an input to the whole cattle feeding system, and yet we've seen them basically hold or move together. So that's a good testament that the expectation is general price increases in all commodities. Um, Energies are not skyrocketing, but they're up
Mhm.
substantially from where they were in the summer. Again, I think it's just this anticipatory demand that the market feels is out there. And I guess one part of me says how interesting this would be in all of these markets had this darn COVID had come along, and you wonder, particularly in grain markets, instead of getting torpedoed in the summer, if they might have rallied into late spring or early summer. But that's all hindsight. It is what it is. But
Mhm.
we've got an interesting demand driver in China buying a lot of products on a lot of fronts. And now, word today was they're substituting wheat in their auctions for corn and meal in feed rations. So China's putting wheat out. They have wheat supplies. So what does that mean for wheat down the road? Does it mean they're going to come in and buy cheaper wheat elsewhere? Maybe.
Yeah, a lot of things to consider, and I think all eyes are not only going to be on that South American weather and the Midwest moving forward the next few months, but I think China as well is going to be a big key. Brian, dairy markets, any updates for us there on this Monday?
Well, let's start with the word I've been using the last several Mondays, and that's volatility. As far as updates, the product market really hasn't kept up that well. Bit of surprise. You look at the way the cattle market's been, the product market, the cheese, the powders, the world global numbers, those have improved in recent weeks. But just here at home, just where things are at, the dairy market down again today. You look at the February contract now, it's 1602. Let's put that in perspective. On the 11th of January was trading at 2008. So lost 20% in just a few weeks. Really getting hammered. I think it goes back to two things. One is we know that this food box lunch program, that's supportive, but no one really seems to know what it looks like yet. We can't get a good handle on it. So there's that, and it may not be more closer term than it is spread out. Don't know what this next potential stimulus package looks like. But also we talked about this before on the production reports. The numbers have been moving upward on production, not downward.
Mm-hmm.
And that industry could face a supply problem. And the futures market, it's certainly starting to, maybe send a signal.
Well, Bryan, always great insight. If producers want to speak with you or anyone else on the team there at Total Farm Marketing, get a little help with their marketing plan for anything they have going on around the farm, grains, livestock, dairy, you name it, what's the easiest way to do that?
I think the easiest way is to just pick up the phone and give us a jingle. A little bit old school that way. I'd rather talk to somebody maybe than email, but we can do it anyway. But 800-334-9779. Or if they'd like to shoot me an email, that would be great too. And that's Bryan@totalfarmmarketing.com. And just ship us your questions or comments. And happy to spend some time maybe setting the table with ideas.
Well, and you can also get that phone number and more at totalfarmmarketing.com. Bryan, I appreciate the time as always. Thank you for joining me on this Monday. We'll talk to you next week.
Jesse, this is awesome. Thank you and good luck, and everyone stay safe.
Bryan Doherty, Senior Market Advisor with Total Farm Marketing by Stuart Peterson, joining us today here on Market Talk. Find more online, markettalkag.com. This has been the Monday, January 25th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.